For the 2025 budget update, these are the topics that we're going to cover in the next hour. So we will look at individual tax update, corporate tax update, a tax incentive, indirect tax update, and any other taxes. At the same time, we will also have some refreshment on the current tax development, on what is the IRB focus on in the upcoming year, a transfer pricing documentation, and the e-invoice overview. All right, so let's enter into our first topic. So in this year budget announcement, our government do focus on the three main areas. First is to revitalize and grow the economy. Second is for generating change. And the last is for rakyat well-being. Because of to maintain the rakyat well-being, you will see later on we have a couple of changes in terms of personal tax relief. This is where our government revenue come from. So I make a comparison between year 2024 and 2025. So you can look at your right hand side. For year 2024, the revenue is actually consists of 322 billion, where when it comes to year 2025, there is an increase to 339.7 billion. Out of 339.7 billion, you can look at the green color in your right hand side. It consists of the direct tax, the major part of it, which is contributed 188.8 billion. So direct tax, we have personal tax filing, personal tax payment, corporate tax payment, and also withholding tax and so on. So let's look at the blue color, the indirect tax portion, contributed 70.2 billion. So indirect tax portion consists of the SST that we paid, the sales tax, and the service tax. Whereas the orange color consists of non-tax revenue of 80.7 million. So what is a non-tax revenue? For example, like the duty, okay, there's an import duty that we paid, the saman, all right, the traffic saman, the penalty from the baga hasil, that is all under this category, the non-tax revenue, which is contributed 80.7 billion to the country. All right, so this is where our fund goes to. In year 2024, total fund allocated is 407.5 billion, where come to year 2025, it is increased to 421 billion. And our government also announced that this is the highest budget allocation ever. So where is this 421 billion goes to? So mainly the main part is on the operating expenditure, like such as the salary, the payment, payroll payment for the government servant. That is on the red color part, the operating expenditure, and 86 billion goes to the development expenditure. Okay, so what is the changes that we have for individual tax? First of all, our government announced that there is a RON 95 subsidy cut. So foreigner and the top 15 of super rich consumer is enjoying 40% of the RON 95 petrol subsidies worth 8 million a year. Our government is planned to implement a targeted subsidy by middle of year 2025, which is another half a year to go. And they also rest assured us that 85% of the Malaysian population is remain unchanged, so we're not affected. So they only target on the foreigner and the top 15 super rich people to cut the subsidies. So let's wait for another half a year to see how our government going to implement this targeted subsidy on the RON 95 petrol. Okay, next, relief on the medical treatment expenses for self, spouse, and child, maximum 10,000. So in our personal relief, that is a relief for medical treatment, maximum you can claim is 10,000. This relief is actually expanded to cover the full medical checkup, mental health checkup, and consultation. Purchase of a self-kit tax, like the COVID-19 self-kit tax, influenza kit test kit, okay? So let's say if you were to buy a test kit in the pharmacy or in the Watson, in the Guardian, as long as you keep the receipt, you can claim the tax relief under here. Purchase of a self-tax medical device, like the glucometer, pulse oximeter, blood pressure monitor machine, and the thermometer, okay? Some of it you can actually also get in pharmacies. Same thing, you keep the receipt and you can claim the relief, all right? So next, the fees for the disease detection examination in the clinic or in the hospital. Previously, when we talk about this medical treatment, you can claim a body checkup expenses under this medical treatment, but it is only limited to the full body check, all right? In previously, it's only full body check, you can claim a relief under this medical treatment. But now they change. So even though you only do a blood test, you only do a urine test, okay, or ultrasound, or maybe for ladies, we went for mammogram test, pap smear, we still can claim the relief moving forward. Okay, we keep the receipt and then we can claim under this medical treatment relief, limited to 1,000 for the body check. All right. Another thing, Part of this relief as well, for the relief for the assessment and the diagnosis for the disabled child. Like for example, the autism children. Let's say we send him or her to diagnose or to assessment, then we can claim a relief up to 6,000. Previously, it's only 4,000. Now they increased to 6,000. This is effective from year assessment 2025. So next, relief for charging facilities on the EV. If you're aware that we can claim a charging facilities on the EV vehicle, and then this item is now expanded to cover the purchase of food waste composting machine for the household use. So this you can only claim once in a lifetime in these 3 years. Okay, year 2025 until year 2027. You can claim only once in these 3 years, and then maximum 2,005. So next is relief for disabled person. This is very we are actually welcome for this relief. So this is an increase of the relief for disabled person. So disabled taxpayer, the current position, you can claim a tax relief of 6,000 and now increase to 7,000. For disabled spouse, you can claim a relief of 5,000 and now increase to 6,000. And for those who have disabled children, from previously the 6,000 now increase to 8,000, effective from year assessment 2025. This one you must be with a valid OKU card. All right, so you must have a valid OKU card in order for you to claim the relief. Next, relief for sport activity. Under the current position, the sport activity and the sport equipment, the purchase of equipment for self, for spouse, and for children are limited to 1,000. It's now proposed to include our parents. So effective from year assessment 2025. So now onwards, next year onwards, you can actually get your parents maybe to, they can register for the membership, they can register for the booking of, let's say like badminton court, for example, then you can claim the tax relief on that. Next, relief for health and elderly care. Under the current treatment, the medical treatment, the special needs, and the parental care expenses include like the medical treatment in the clinic and the hospital. I give an example. Let's say like our parents, if it's fever, so you send him or her to the clinic for doctor checkup, then you keep the bill. That bill you can claim a tax relief under here. All right, that is for the medical treatment. So medical treatment and home care nursing, a daycare center and nursing home is claimed under this relief as well. A dental treatment and a full body checkup for your parents, limited to 1,000 under this relief. It's now being extended to cover the vaccination as well. And it's also expanded to cover the grandparents. So previously, let's say if we send our parents for the vaccination, we cannot claim any tax relief. And now they are allowed to claim under this relief for elderly care, maximum of 8,000 overall. This is also effective from year assessment 2025. All right. So next one is a review of income tax deduction. This is not a relief, but then it's an income tax exemption and a deduction. So for income tax exemption for the childcare allowance under the perquisite from employment, this is where the employer, they are given the childcare allowance to the employee so they can get a certain tax deduction. All right. So the deduction is the further tax deduction for the employer who provide a childcare allowance include elderly care. Now they include the elderly care as well, okay, for the parents and the grandparents. Like for example, let's say if the employer is paying a childcare allowance of 3,000 per month to a staff, and the employer, in this case, they can get a tax deduction up to 6,000. This is what we call a further tax deduction. Means at the same time, you can get a deduction on the actual amount that you paid and plus one time of a deduction on the same amount. Means that you pay for 3,000 a month, then you can get a 6,000 deduction on that. So this is to encourage an employer to also helping the employee on the childcare to take care of the childcare and the parental care. For employee side, individual income tax exemption up to 3,000 per year is given on the childcare allowance. Okay, let's say the employer given us the childcare allowance, we can get a tax exemption up to 3,000 a year. And this amount is now also include the elderly care for our parents and our grandparents, effective from year assessment 2025. Next, relief for education and medical insurance. So tax relief for the premium that you paid for the education and the medical insurance is now increased from 3,000 to 4,000, effective from year assessment 2025. This medical insurance is actually since 10 or 20 years ago is remained at the 3,000. So now the government is finally listened to us that the increase of insurance premium that we paid. So now they adjust the relief accordingly. So next year onwards, we can claim 4,000 of medical insurance relief. All right, next is on the PRS. So As we know, when we contribute to PRS, we can get a tax relief, but this tax relief is going to end soon. So it's only eligible to claim from year assessment 2012 until 2025, and it will end. So government is now being extended to another 5 years to year assessment 2030. Relief for SSPN. So under the current position, you can claim a tax relief up to 8,000 for the annual tax saving for the SSPN. Start from year 2027 until year 2024. It is also going to end soon. Our government is now proposed to extend another 3 years up to 2027 for the SSPN contribution tax relief. Subject to the following condition. It can only claim by either parents, okay, for the maximum amount of 8,000. So this is different with the previous. Previously, let's say we have a parents, a husband and wife. If both of them contributed, and both of them can claim the tax relief. But now the rules is changed. For the year 2025 to 2027, it can only claim by either parents. So even though the husband contributed 8,000 and the wife also contributed 8,000, but add up the parents, one of them can only claim the 8,000. Anything more than that will be burned. All right, this is the changes on the SSPN contribution. Next, relief for the nursery and the kindergarten fees. A tax relief up to 3,000 for the fees paid to the registered TASCA and the TATICA. For the children up to 6 years old is being extended, which is already expired as well in the year 2024. It's now extended to year 2027, another 3 years. So let's say if we send our children, which is below 6 years old, to the kindergarten, okay, we can claim a tax relief up to 3,000. This is provided the kindergarten or the nursery must be registered with the authority. Okay, so this is a good effort from the government as well. A relief for housing loan interest payment for the first residential house. So next year onwards, let's say if we purchase our first residential house, the loan interest that we paid, we can get a tax relief. In fact, this is not a new tax relief being introduced in this year. Way back to 15 years ago, somewhere year 2029, government actually first round introduced the tax relief for the housing loan interest being deducted. And then that is also take up 3 years. After 3 years, it is ended and no more continue. So now it come back again. But in this round, the rules is actually changed from compared to the last round of tax relief given. So for this round, the tax relief will be given in 2 categories. Refer back to the housing price. First one, let's say the price is up to 500,000. The total tax relief that we can claim is 7,000. Okay. For the first category, let's say the housing price is up to 500,000. The tax relief that we can claim is 7,000. So more than 500,000 up to 750, we can claim a tax relief of 5,000 per year maximum. Okay, so it will be between either 7,000 or the 5,000, depends on how much is your housing price. The effective date is for the SMP execute between the 1st January 2025 until the 1st December 2027. So let's say now you are in the plan that want to get a house, want to get your first house, then maybe you can hold on for another 1 month. So wait until January 2025. They only execute your SMP. You can get a tax deduction you can get a relief on your housing loan that you paid. Anyway, there is some condition on that. So the first one, the house must not use for generating any income. So must be for the own stay. So you cannot like getting the house and then you rent it out and generate income. So that is not allowed to claim. Second, the SMP must be executed within after 1st January 2025 and until 31st December 2027. So the amount that eligible to claim is for 3 consecutive year assessment. So you can claim for 3 years. If a house is purchased under the shared name, then we have to proportion it to 2% in order to claim. All right, so that is on the housing loan. Next, for the individual tax, this is also a good effort from the government. So they review the tax on the foreign source income. Under the current decision, the foreign source income received by a resident in Malaysia is actually exempt from tax from 1st January 2022 until 31st December 2026. So for the individual resident in Malaysia, if they receive a foreign source income, it is exempted from tax. But it is ending in 2 years later in 2026. So now the government proposed that the income tax exemption on the foreign source income will be granted 10 years, all the way until 31st December 2036. So this effort is actually mainly to encourage our Malaysian citizens to transfer back the fund into Malaysia so that we can have a more cash inflow from overseas country into Malaysia. So the effective date is until 2036. So this is on the individual who receive a foreign source income. So for the company, let's say you receive a foreign source income, it is still taxable. All right. Only individual, you can get a tax exemption on that. Okay. Next, very important on the dividend tax. Maybe after the budget announcement, you will listen that there is a new tax being imposed on the dividend tax. Yes, there is. All right, let's look at how it works. Okay, under the current position, the dividend contributed by the company is under the single tier system and is exempted at the shareholder level. So the government proposed a new dividend tax, which is at the 2% of tax being imposed on the dividend income exceed 100,000 for the individual shareholder annually. That means every year, let's say if the shareholder receive a dividend income more than 100,000, it will be taxed at 2%. All right. So individual shareholder include a resident, a non-resident, and even an individual holding shares through a nominee. Effective date, first year assessment 2025 means start from 1st January 2025. If you receive dividend more than 100,000, you will be taxed at 2%. Okay. There is still certain exemption on that. First, dividend income received from overseas is exempted. Dividend income distributed from the profit received from a pioneer status and having tax incentive from type of company. Okay, the dividend given from the company who are under tax incentive type, you are exempted. Dividend income paid from the profit of a shipping company is exempted. Shipping company is always having certain type of tax incentive and tax exemption. That's why the incentive given from there is also exempted. So dividend from cooperative, dividend from a closed-end fund, dividend received from a Labuan entity, and any other exemption specifically spelled out by the IRB. So dividend is also exempted and not subject to tax. Let's say if a dividend is contributed from EPF, KWSP, Lembaga Tabung Angkatan Kerja, and Amanan Saham, and also unit trust. Let's say our unit trust, there is a profit, we have a dividend, and that is exempted. All right, we do not count into this 2% dividend tax. I give an example. How does it work? Let's say Mr. Chris, he's an accountant, and he is a tax resident in Malaysia as well. So this is his tax computation for year 2025. Let's look at the blue color for where his income and expenses incurred. So during the year, he received a gross dividend income under the single tier system for 145,000. And he received a gross dividend income under the tax exempted category for 80,000. At the same time, he have employment income, which is 93,000. So for the expenses that he incurred, include the interest expense. Okay, he getting a loan, he incurred interest expense of 5,000. And then he also SCCA professional membership. Okay, he paid a membership fees of 3,000. So this is how you work on the tax calculation. Let's look at the orange color. So the statutory employment income is 90,000. How do I get 90,000? I take 93,000 of employment income less out his SCCA membership fees. So I get 90,000. All right. So statutory dividend income 40,000. How do I get that? So his total income subject to tax, right, is 145,000. And the first 100,000 is exempted. Do not need to pay tax. So I less out 100,000. I left 45,000. And this 45,000, he incurred the expenses on that, which is 5,000. I less out another 5,000. That is where I get 40,000 of his statutory dividend income. So total of it is equivalent to 130,000 for the total aggregate income. Let's say this Mr. Chris, he have an approved donation, okay, to the approved institution. So he contributed 13,000, so I can less out another 13,000 for him. So I arrive a total income of 117,000. So Mr. Chris, he have a personal tax relief. Okay, let's say for example, total 17,000. I less out another 17,000. Therefore, I have a chargeable income of 100,000. All right, I have a chargeable income of 100,000. So what do I do with this 100,000? How much of this 100,000 belongs to the dividend income, and how much of it belongs to the employment income? So let's do a simple mathematics. So the chargeable dividend income after the calculation, I just forward it, is equivalent to 30,770. All right. So the dividend tax will be 2% of this amount, okay, which is equivalent to 615.40 cents. So the chargeable income on the employment income, okay, chargeable employment income to be taxed at the skill rate as per our normal personal tax rate, all right, is equal to 69,230. How do I get this 69,000? I take his total income of 100,000 less out the dividend income, of 30,770. Therefore, I will get a 69,230. So this amount, if you refer back to the tax rate table, it is fall under the tax bracket of 19%. Okay, so I times 19%. So the tax that he need to pay is 13,153.7. Okay, after add up these employment taxes and the dividend tax, Mr. Chris, he has to pay the tax of 13,769.1. All right, means moving forward now, year 2025, he need to pay the extra tax of 615.40 cents for the dividend tax. Okay, on the dividend that he received more than 100,000. Okay. All right. So we have covered all the personal tax update. Now we enter into the corporate tax. First, review of a capital allowance. Because of the e-invoice, so the government now is given a accelerated capital allowance for the software that you purchase for the e-invoice. You can claim it within 2 years. This is effective from year assessment 2024 until year assessment 2025, 2 years time. So next say, if you were to purchase an accounting software for the e-invoice, then you can fully claim the capital allowance in 2 years time. Okay, a tax deduction on the donation. The company will be granted a tax deduction for the new equipment and the machine donate to ILKA, Polytechnic, and registered vocational college. So start from year assessment 2025 to 2027. It's also take 2 years time. The cost for developing a new courses at a private higher education institution. Okay, moving forward for year 2025 until year 2030, in these 5 years, the higher education institution, it can actually fully claim for the cost of developing a new courses by then. It is also extended to cover the development of a technical and a vocational education and training, which is the TVET courses by the private skill training center. Okay, next we see the tax incentive. If you are aware, for this year budget announcement, basically the government is more focused on the individual. That's why just now we covered so many individual tax relief updates, the expand of a relief and so on. But this year, the update for the company, for the corporate, is actually lesser. Okay, for the first tax incentive that we need to mention here is to hire the woman return to work. Under the current position, for women returning to work after a career break of at least 2 years, right? So must be 2 years, is eligible to claim a income tax exemption for the salary up to 12 months. That have to apply to the talent corp. It's not automatically granted. So the proposal is 50% further deduction given to the employer on the employment expenses for hired a woman return to work for the maximum of 12 consecutive months. So under the current position, if we hire the woman return to work, the woman who is an employee will get a tax exemption on the salary up to 12 months. But employer will have nothing, just a normal tax deduction. All right. So moving forward, the government is actually given some incentive to the employer as well for the 15% further tax deduction. All right. So in this case, both employee and the employer, they are enjoy the benefit. Again, this is not automatically granted. It has to apply to the tenant corp within the 1st January 2025 until the 1st December 2027. Structured internship program. Under the current situation, a double deduction will be given to the company incurred expenses for implementing the structured internship program from year assessment 2022 until 2025, which is ending soon. All right. So the government proposed this to be extended until year assessment 2030, 5 years extend, and also to include the student participate in the training by the industry regulatory body. Okay, this has to apply to the talent corp as well. It's not automatically granted. Provide caregiving leave benefit. This is a new benefit given, a 50% further deduction being given to the employer who provide additional paid leave up to 12 months for the employee for caring for their children or the disabled family member. This is effective date is for the application received by the talent corp from 1st January 2025 until 31st December 2027. So this one, let's say the employer given a paid leave to the employee, okay, to be stay home and taking care of the children or the sick family, you can get a 50% of further deduction, okay, on the application applied to the talent corp within the period. Okay, expansion on the tax relief for the childcare allowance. Under the current situation, the current provision, a further deduction on the provision of childcare center means the employer, okay, they provide a childcare center. And the childcare center is to register with the Department of Social Welfare. And they make a payment for a childcare allowance to the employee who below 4 years old. You can get a tax deduction. It's now also expand to cover the elderly care for the parents and the grandparents. Effective from the year assessment 2025. So you see, in this year budget announcement, our government is actually start taking care of our parents and grandparents. So some of the personal relief we do cover the parents and grandparents, and also some of the incentive in, like for example in this case, they are start covering the parents and the grandparents as well. Okay, implementing the flexi work arrangement. Under the current provision, the double tax deduction is given for the expenses for implementing the flexi work arrangement from 1st January 2020 until 31st December 2022, which is already expired. So the total amount can claim is 500,000. So this is a good news for those who are never claimed before. Now they come back again. So the new proposal is a 50% a further deduction on the expenses incurred for the capacity building and the software acquisition given to the employer who are implementing flexible arrangement, restrict to 500,000 and subject to one-off claim limit. So you can only claim one time, it's a one-off, and have a restriction up to 500,000 as well. So the effective date is for the application received by the Talent Corp from 1st January 2025 until 31st December 2027. Next, for those who are logistic operator, smart logistic complex, now is given a new tax incentive. So the income tax exemption equivalent to an investment tax allowance of 60% on the qualifying capital expenditure incurred for the period of 5 years provided to the smart logistic complex operator. So it can be set off against 70% of the statutory income for every year. It's not all the logistic operator is eligible, so they have some requirement as well. So smart logistic operator investor and the operator that invest in the construction of a smart warehouse and undertaking the eligible logistic service activity. All right. So the operator must lease a smart warehouse under the long-term leasing for at least 10 years and undertaking the eligible logistic service. So what is the eligible logistic services and so on? So we will have to wait for the further guideline come out. All right. This is some other condition that mentioned in the budget announcement, like must be the regional distribution center, and the warehouse must have a minimum build-up area. All right. Must adopt at least 3 IR 4.0 element. And the effective date is for the application received by MIDA. This one is to apply to MIDA. For application received by MIDA from 1st January 2025 until 31st December 2027. All right. So we covered for the tax incentive. Next, we will look at our next topic on the indirect tax. Okay, first thing on the sales tax, sales and service tax, the SST. Sales tax exemption will be maintained for the basic food item consumed by the citizen. So the government already said that for the basic food item consumed by the rakyat will have sales tax exemption remain as usual. And sales tax will not be imposed on the basic food item consumed by the citizen. Will only be imposed on the non-essential imported premium goods. So I take the example that used by our Prime Minister during the budget announcement. Is saying salmon and avocado. So now we are saying salmon and avocado probably will have a price increase. I'm not too sure. All right. So the scope of a service charge we expand to cover the new service, such as a commercial service transaction for the B2B transaction. All right. This is for the service charge. Okay. Next, excise duty on the sugar sweetener beverage. The excise duty on the sugar sweetened beverage will be increased in phases, start from 1st January 2025 at 40 cents per liter. So start from January, okay, so we will see that this sweetened beverage will be getting price increase maybe. So this is a good effort that the government want the citizen to maintain a good and healthy lifestyle and take a lesser sugar sweetened beverage. So they keep on adjust on the duty of that. You can see this is not a new. Basically, the year before last or 2 years before ago, they do adjust the duty as well. Okay, next we look at the stamp duty. Assignment of a life insurance policy and family takaful certificate. So the deed of assignment for the life insurance policy and the family takaful certificate been given by the way of love and affection through a trustee. Originally, the stamp duty will be from 1% to 4%. It's now being proposed to change to 10 ringgit, 100 ringgit, 500 ringgit, and 1,000, depends on the transfer value. Okay. Next, loan and financing agreement based on Sharia principle. A fixed stamp duty of 10 ringgit be imposed on the loan and the financing agreement for the purchase of goods based on Sharia principle, other than a hire purchase. This is for the loan and financing agreement executed from 1st January 2025. So start from 1st January 2025. Let's say if you were to take a loan, okay, a personal loan, then we will, if you were to select an Islamic bank, our stamp duty will be at 10 ringgit. Okay, exemption on the stamp duty for loan and the financing agreement. So stamp duty exemption being given for the scheme pembiayaan micro loan and the financing agreement up to 100,000. This is for the effective date is for the loan and the financing agreement being executed after 1st January 2025. And the one next to it, exemption for the stamp duty on loan and financing agreement as well. 100% exemption given on the financing agreement executed by the SME and the investor through the initial exchange offer platform registered with the SC for 2 years, start from year 2025 and 2026. So next, you'll see our government going to implement the self-assessment system for the stamp duty. Under the current situation, now we have a self-assessment for corporate tax submission, personal tax submission, and also the submission of RPGT, the real property gain tax. So next, they're going to implement the self-assessment for the stamp duty. So moving forward, the stamp duty system, the SDS, they maintain the duty payer and the agent to upload the information in the HASIL website, which is a stamp website, undertaking the self-assessment of the value of stamp duty and making the payment within the deadline. So moving forward for stamp duty, so we need to calculate ourselves how much is the duty, and then we have to pay the duty within the deadline. This is also being implemented by phases. There is a 3 phase, start from 1st January 2026, 1st January 2027, and 1st January 2028. Okay, 3 phases for different type of instrument. So next, there is a new taxes being imposed on the carbon tax. Okay, start from year 2026, a carbon tax will be introduced on the steel, iron, and energy industry. This is to encourage the adoption of the low carbon technology for the manufacturer. So the detail, we will see how does it work when the IRB guideline come out. The LHDN, they already mentioned that they're going to come out a guideline to show how does it this carbon tax work, how is the calculation look like, and so on. All right, we have covered our topic for the budget update today. So next, we look at what is the current tax development that you need to focus on. These are the few topics that the Lembaga Hasil officer informed us during one of the seminar. These are the areas that they will focus during their upcoming the tax audit. All right, first is on the high net worth individual, foreign source income, cross-border transaction, transfer pricing, online trading activity, shadow economy, approved donation, tax incentive, and the RPGT. So let's say happen we have fall into any of this category, then you have to make sure that your tax compliance is really up to date, so that moving forward, let's say if IRB come to conduct an audit against you, so you are safe, so you can avoid any not necessary penalty. All right. Employer obligation. So as an employer, what is the obligation? This is not a new announcement, but I put it up here mainly to remind all the employer here. So you need to do all this submission and all this necessary obligation. All right, first is on the Form E, employer return form. By every March of the year, you have to submit the Form E. So Form CP21, notification of employer for the departure from a country of an employee. So let's say if you have hired an expatriate, if an expatriate has terminated the work and then leaving the country, as an employer, you need to do a tax clearance for them, and you need to submit a CP21. All right. So next, Form CP22, notification of new employee. Let's say if you have taken a new employee, so within 1 month from the commencement date, you need to submit the Form CP22 to inform the LHDN that you have hired a new employee. All right. CP22A, a tax clearance for the cessation of employment under the private sector, where 22B is under the public sector. So this form have to submit 30 days before the cessation of employment, okay, to inform the LHDN that, see, now I have a staff, I already terminated the work and then cease of employment. All this form, effective from 1st January 2024, you have to submit. If not, let's say IRB, they conduct an audit against the company, then they will start penalize. One form, they could penalize you up to the maximum of 20,000. Okay, next, transfer pricing. So the tax deduction on the ESG expenses been given up to 50,000 per year for 3 years on the ESG related expenses. This is not a new announcement. In fact, it's being announced in 2 or 3 years back to the budget talk. But what I want to highlight here is, look at the yellow color. So the transfer pricing documentation and the e-invoice implementation is actually fall under this ESG expenses, and you can get a tax deduction up to 50,000 per year for 3 years, right? So now, let's say if you were to engage a professional to do the transfer pricing for you, to do the e-invoice implementation for you, you can get a tax deduction. So what is transfer pricing? Basically, it's an inter-company pricing arrangement for transfer of goods between the related and the common control legal entity. So why are transfer pricing keep getting more and more well-known nowadays? Because there's an increase in the cross-border business transaction where the tax rate is changed from one country to the other. So the business may able to reduce the tax cost by moving the profit from one territory, a higher tax rate one, to another lower tax rate jurisdiction. Okay. Therefore, those government, let's say with a higher tax rate government, they're actually losing out the potential tax income by switching the profit from one country to the other. So what is the risk to you after I talking about so much of all this switching of profit? Okay, are you in the risk? Are you one of the following? One of many company in a group, having business dealing with your spouse company, with your parents company, with your brother sister companies. If your company participate directly in the management and control of the other company, if you are participate directly or indirectly in the management and control in both a company that having business dealing, right? Are you one of it? So I give some example of an intercompany transaction. Let's say sales and purchase of a raw mat, inventory, or any other tangible asset. You're paying royalty to your mother holding company. You're paying license fees to your holding company. Okay, service and paying management fees. Or you are renting office from a related company or from a holding company. Or they're giving loan, yeah, you are paying interest and so on. Okay, all this is having a related party transaction. So are you within the scope? Let's see what is the scope for the transfer pricing. So if your company, the turnover exceed 25 million and the related party transaction more than 15 million, and you're having a financial assistance loan more than 50 million, yes, you are within the scope. In this case, you must do a full transfer pricing documentation. All right, you are within the scope. So let's say you're out of the scope, but you are having overseas control transaction. Within Malaysia, you are one company having some incentive, the tax incentive, tax exemption, tax holiday, and so on. Domestic control transaction. So you are recommended to do a full transfer pricing documentation, even if it's not at least a minimum TP documentation that you have to fulfill. All right. Let's say you are not all these things. You are out of a scope. You're only having transaction with a Malaysia company which have a same tax rate, no incentive, nothing. You are recommended to do at least a minimum transfer pricing documentation. All right. At least a minimum transfer pricing documentation you need to do. Oh, bear in mind, the transfer pricing documentation has been mandated for all the company that having a related party transaction. I repeat, so for all the company in Malaysia, if you are having related party transaction with your related company, okay, with your holding company, with your subsidiary company, and so on, you need to do a transfer pricing documentation. It's now a must. So IRB do not give you an option. It say this is a must to do. It's a mandatory. What if you don't do? All right. So let's look at what is the penalty. Failure to furnish a TP documentation within 14 days, they give you deadline. So within 14 days, you must give them. So you failure to do so, upfront, they will fine you not less than 20,000 and not more than 100,000. Okay. On the tax, they will still charge you a surcharge of a 5%. I give an example. How does it work? Let's say this AB Sdn Bhd was requested to submit a TP documentation to the IRB within 14 days. So they do not do so. They only submit after 30 days. So they need some time to wrap up the report. So they'll be able to submit after 30 days. So audit finding result in an adjustment of an income of 100,000. So they adjust 100,000 income against the company. So adjustment give rise to 25,000 of additional tax. So in this case, how much is a penalty because of this? You look at the right-hand side of the screen. So the fine between 20,000 to 100,000. I take the minimum 20,000, and then they charge a 5% surcharge on the adjustment of income. Okay, 5% on the 100,000, another 5,000. So additional tax need to pay is 25,000. So total is 50,000. Does it end? No, it's not end. This is an audit case, so IRB will still charge you the audit penalty. Okay, the penalty on the additional tax. Let's say I just take middle, which is 35%. This is not the highest. The highest is 45%. Right? So let's say 35%, it contributed 8,750. So in this case, AB and Joanne perhaps need to pay a total tax of additional tax of 58,750 because of the non-compliance to the transfer pricing. Okay, so you can see it's actually a huge penalty. This is one of the example, the love letter by the LHDN. Does it look familiar to you? So every time when LHDN, they want to conduct an audit, they will send this love letter to you and asking for the document to be sent to them for the auditing. Look at item 2.6. They request for the transfer pricing documentation, okay, to send to them. This is one of our client, and this client is actually not a large organization. It's just an SME, but they were still asking for the transfer pricing documentation. Let's say if you cannot finish it, then they will penalize you upfront 20,000 to 100,000. Okay, so for the transfer pricing. So if you have any issue on the transfer pricing, you can always contact our team. We will be able to assist you on the transfer pricing. Okay, so next we come to our last topic today. So a quick review on the e-invoice. All right, so what is e-invoice? So e-invoice is a digital representation of a transaction between the buyer and the seller. Okay, so this is what we call e-invoice. It will be in the XML format or the JSON format. So it's not to say that you send a PDF file to your customer, you send a JPEG invoice to your customer, it is e-invoice. No, it's not. All right. So this is one example for the e-invoice. If you take a look on your TNB bill nowadays, they have a QR code in between. So if you were to scan the QR code, you will be able to see your details, and there is an e-invoice on that. Okay. So who will be involved in the e-invoice? So basically, it's all the individual, all the legal entities are required to comply with e-invoice requirement, include association, cooperative society, corporation, LLP, you need to do e-invoice, a partnership, you need to do e-invoice, and so on. So e-invoice, it covers the transaction for B2B, B2C, and also B2G. You're having business dealing with the government, you need to give them e-invoice. Is anybody exempted from e-invoice? Yes. Look at the list. Basically, is Agong, former Agong, government, federal government, state government, local authority, and the last one. Look at the red color bullet. Taxpayer with annual turnover or the revenue less than 150,000. You do not need to do e-invoice. Okay. Anyone more than that, you have to do e-invoice. So these are some of the examples that e-invoice is exempted for employment income. Next, moving forward, your employer paying you the employment income, you do not give them the e-invoice, is exempted. So what is a type of e-invoice that we have? There's a 4 category here, but there's a total of 8 type of document that we have in the e-invoice. We have invoice, CN, DN, a refund notes, a self-bill invoice, self-bill credit note, self-bill debit note, and a self-bill refund notes. So during one of the budget announcement, our Prime Minister actually announced that e-invoice being mandatory for the taxpayer with annual turnover exceeding 100 million from 1st August 2024, which is already over. But what I want you to take note now is this. Okay, your next, the e-invoice implementation deadline is 1st January 2025. For those taxpayer with an annual turnover or revenue more than 50 million up to 100 million. Your implementation deadline will be at the 1st January 2025, which is only 1.5 months left from now. And for all other taxpayer, you need to start implement on 1st July 2025. LHDN and the government is actually many times saying that there is no U-turn, there is no extension of that. So by 1st January 2025, there is a must for the second stage of implementation. And by 1st July 2025, it will be applied to all. So it's 7 months from now, 8 months from now for the 1st July 2025, for all other taxpayer to be implement the e-invoice. What if you don't do that? All right. So under the Act, a fine not less than 200 or not more than 20,000 or imprisonment for 6 months or both. Okay, for not comply to the e-invoice. I give you an example. Let's say I take the minimum fine, 200 ringgit. If during the year or maybe during the month, you have 100 pieces of an invoice, do not comply with the e-invoice regulation, do not do e-invoice. So 100 times 20, 100 times 100 piece of invoice times 200 fine. It gives you the 20,000 of penalty or fine for just do not comply with e-invoice only. All right. So this is a huge penalty as well. So please get ready for the e-invoice implementation. All right. So this is how does e-invoice work. First, look at item 1. So you issue an e-invoice. You send to LHDN website for the validation of the invoice. So the website will notify you the invoice being validated, and you share it to your customer. If any cancellation of invoice, any rejection, you can do that in the website. Okay. At the same time, your customer and yourself will be able to obtain a summary of the invoice of the transaction in the portal as well. Okay, so this is what you need to get ready for your e-invoice implementation. First, to allocate and to equip the personnel with necessary capacity to adopt and to oversee the implementation of e-invoice. Determine the availability of the data source and the structure, your IT capacity, okay, your support team to get ready for the readiness of e-invoice, all right, to process, to comply with an e-invoice implementation, okay, to get to know the obligation. Last, to review your current process in issuing transaction document, like how do you issue an invoice, how do you issue a debit note, or how do you issue a credit note, how do you process a refund. Moving forward, you might want to change a certain SOP on all these things. Okay. If you get confused on that, please contact our team. We do assist our client in terms of an e-invoice implementation as well to make sure that you are ready before it comes. Okay. So the list of a required field in the e-invoice. You can look at the screen. That is total 55 field of information that you need to fill up in your e-invoice. Out of a 55, 35 column is a mandatory. Okay, it's a mandatory to fill. So you look at here, there's a total 8 category of it. Each category, you have a mandatory column for you to fill up in order for you to issue one piece of e-invoice. All right. If you heard about consolidated e-invoice, what is that? So consolidated e-invoice, okay, scenario 2. Consolidated e-invoice meaning for those, let's say supplier, if you were to issue a normal invoice to your buyer, if they do not need an e-invoice, okay, you just issue a normal receipt to them. And as a supplier, every month on a monthly basis, you need to consolidate all the receipt and issue one consolidated e-invoice to the IRB. Okay, issue and send it to the IRB for the validation and the recording purpose. This is on a monthly basis. You don't do it quarterly, you don't do it yearly. On every month, you have to do so. Here are some of the activities saying that you cannot issue consolidated e-invoice. First, automotive, aviation, sales and purchase of a luxury goods and jewelry, construction, wholesale and a retailer of a construction material, license betting and gaming, and a payment to agent. Okay, these 7 category you cannot issue consolidated e-invoice. You must issue every single e-invoice. Okay, if you come across, there is also an item called self-bill e-invoice. What is that? Basically, there is some bill scenario that IRB saying that under this scenario, you need to issue a self-bill e-invoice to yourself as well. First is payment to agent, goods sold, okay, for overseas or service render from a service provider. Let's say you import goods or you import services. Profit distribution, e-commerce transaction, paying out of a betting winner, transaction with the individual who do not conduct business, just an individual person, interest payment, and also insurance compensation. All these 8 categories, you need to do a self-bill e-invoice. So this is the latest update from the LHDN. IRB has announced that a 6-month interim relaxation period starts from 1st August 2024, the phase 1 implementation, for the business to be aligned with the e-invoice requirement. So what is this 6-month interim relaxation period? So we'll look at it. All right, phase 1 is already over. So let's look at phase 2 on the 1st January 2025. So your interim relaxation period will be from 1st January until 31st June 2025, where the phase 3 will be from 1st July until 31st December 2025. So during this interim period, you do not need to issue a e-invoice, but you need to issue a consolidated e-invoice, all right, to the LHDN. So there's no penalty. I have already said that they won't penalize you during the first 6 months, during the first interim relaxation period. But you need to do a consolidated e-invoice. Not to say you do not do e-invoice at all. You still have to do a consolidated version. All right. Okay, so we have covered our topic for today. Thank you for your attention.